Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group.
Hello and welcome to Kitco Mining here at Mines and Money London with me, Paul Harris. Today we're taking a good look at the investment space in precious metals, and I'm joined by Jayant Bhandari of Anarcho Capitalist. Good morning, Jayant.
Good to be with you, Paul.
Well, thank you very much for joining us today. Now, it's been a volatile year, 2022, in the precious metal space and the broader mining space. Let's start off with looking back over the past sort of 10, 11 months. What have been some of the highlights and lowlights of the year for you?
Well, firstly, gold price has actually done quite well given the circumstances. Now, clearly the US dollar has done much better than most other asset classes, but I think US dollar has become clearly expensive, and you can see that US dollar overpricing is now spilling over into other asset classes. Gold has gone up reasonably well in my view, and I think mining companies are consolidating and are preparing to go up. Some of the better ones have actually done quite well over the last 2 or 3 weeks.
Well, the GDX has certainly had a nice bounce in the past few weeks.
Yes, yeah, and also quite a few junior mining companies have also done quite well. So although the index hasn't necessarily performed, index of the junior mining companies, but some of the good companies that I think are within that index have actually done quite well.
Okay, thank you. Now, what are the key things you're keeping your eye on at the moment in the precious metal sector?
Certainly the sector is very underpriced. There is a huge amount of value in the junior mining sector just because investors have become very tired about the sector. They have lost hope from the sector, and that is exactly the time to position yourself in this sector. My best years were between 2008 and 2011 when in 2008, people completely gave up on the junior mining sector, and share prices went up many times over those 3 years. And I think we are looking at perhaps the same situation today.
So for mining equity investors this year, there's been quite a bit of pain, but you're saying that it's been a good opportunity to position yourself for the future upswing.
I am extremely hopeful. And the reason is I keep enough cash for my living expenses, so I don't get bad sleep at night, and that keeps me positioned for a nice future. And I think already some of the better companies are improving in their share prices, and I think this will continue. I think the worst in the junior mining sector is already over.
That's an interesting comment. But with investing, timing is everything. So people have been sitting, waiting for the upswing. When's that going to come, do you think?
I don't think timing is everything. I think you can never predict the time. It can turn around today. It might have turned around 3 weeks back. We will only in retrospect know what the timing was. But in my view, good share prices or good companies are already performing, and market is starting to pay attention to value. And the reason is, again, that US dollar has become expensive, and people have to start looking for new places to preserve their wealth or for investment purposes.
I think that's an interesting aspect. There always seems to be something that's taking the shine off gold. You know, going back, we've had sort of cannabis stocks. More recently, you've had the cryptocurrencies. Now it's very much the US dollar strength. Is Gold Day in the sun? Is that coming next year?
Remember, gold has done actually quite well in most currencies except for the US dollar and some of the related currencies. So firstly, gold has done quite well. And also gold has got suppressed because of technical reasons. Hugely indebted society and US dollar, nominal interest rate in US dollar going up. But remember, real interest rate of US dollar is hugely negative. So there's every fundamental reason for gold to go up, but it's the technical reason which has suppressed a lot of asset classes. But once that technical reason is over, the fundamental reasons will kick in. And my guess is that's exactly the time when gold will start performing. Now, of course, overpriced property sector and overpriced IT sector will probably stay suppressed because they were overpriced to start with. But gold wasn't overpriced, and gold and commodity sector hasn't been overpriced. So I think the good days of commodities and precious metal mining sector are in front of us.
Okay. Now, M&A's been a talking point throughout the year. It's been sluggish, but there have been deals. And at the moment, there's a big deal underway with Pan American Silver and Agnico Eagle Mines buying Yamana. And I think many interesting things here. One, it's a big transaction. And two, it's a transaction or a company that solicited 2 bids, 1 hostile. How do you think M&A space will play out next year once this deal is closed out?
I think this is going to release a lot of cash into the market. This will interest the market in more M&A opportunities. People are already investing in companies where they see M&A might be happening in the new year. And once this M&A is over, these bigger companies will start looking at other projects to acquire. So I think M&A should become more exciting and attractive early next year.
Okay, this kind of leads into my next point. The financing window for a lot of juniors has been pretty closed for most of the year. So I imagine a lot of juniors, their treasuries are running quite low. If these conditions of difficult financing continue into next year, I imagine that could either precipitate a mass extinction of juniors or a rash of smaller transactions. How do you think the junior space will play out?
Well, I would always be happy to see a massive extension of juniors. A lot of juniors have no value. They have been working on projects that have done nothing over decades. So many of the juniors should cease to exist. That will always bring health within the sector. But there are some very good juniors who have struggled to raise money. All I want from them is not to spend money in the ground unless they see the market giving value for the value they are creating in the ground. If the market is not giving them value, they should abstain from investing in the ground. Perhaps just keep the lights on for now. But if the market is giving them value, then I think it's perfectly fine to raise money and invest it.
It does seem that there's a view amongst some of the bigger mining houses that even though the juniors are very undervalued, very cheap, they're not investing in them, they're not buying them. Why do you think that is?
I think there are many reasons. Management has to be open about getting acquired. If they have to have ambitions about getting acquired in a way that is pleasing to the mid-sized and major companies. You can't expect 10 times or 5 times your current share price to be acquired at. So, and maybe there's a lot of things that I, as an investor, don't really understand, which geologists and technical teams of the majors understand or see. And also, major companies and mid-sized companies are looking for reduction of permitting risks before they acquire projects. So, I think there are many factors, but I guess the early next year is a time when acquisitions should start happening.
I want to push back on one element of that, if I may. If you've got a junior whose value market capitalization has fallen 70 and 90% this year, to pay a 40, 50, 60% premium over the current share price, one would think it still represents really, really good value. But is that just a psychological thing that the market just won't support? Yeah,
well, you have to forget about the fall in share prices over the last few years. You have to value these companies at the current valuation point. You are not going to recover all the losses you have made necessarily. So I think companies, I know at least one company which is prepared to be acquired that did its IPO at around $4. It's trading at less than $2. Now, should it expect to get acquired higher than $4 to make value for the initial investors? I think that's expecting too much from the from an acquiree.
Okay. Now, we talked a little bit about the lack of finance available to juniors, but I want to sort of change tack slightly. Crypto has had a wild year, and perhaps fittingly ending with a major meltdown in the shape of FTX. In light of this, do you think we'll see people migrate out of crypto, away from crypto, and back into hard assets such as physical gold and silver, and of course the mining stocks?
Oh, absolutely. Until about a few months back, a lot of young people were keen on investing their money in Bitcoin and other cryptocurrencies. But now they don't have that excitement about investing in the cryptocurrencies. And I don't even call investing because in my view, cryptocurrencies are worth zeros. They burn energy, and all they leave behind is zeros and ones in the cloud. So for me, they are worth zeros. So I'm happy cryptocurrencies are finding their natural estate slowly, which is $0 per cryptocurrency. And the new money hopefully will go into hard assets. They don't have cryptocurrencies left anymore, and they are cautious about investing in IT or biotechnology companies right now. So I think this is a good time for the sector, for the mining sector, to exploit this opportunity to bring investors in.
I would agree with that, but you don't really see the mining sector reaching out to those investors. You don't really see mining companies. They attend things like this, Mines and Money, which they habitually do, but you don't see them having a stand at a cryptocurrency conference where they can access and present or be in front of that audience.
Oh, you don't have to do that. It's just that if less money goes into those sectors, there will be more broad-based money available to come to this sector. So that money does not directly have to come to this sector, but it will eventually come to this sector seeking value. At the end of the day, people want to make a profit, and when there's one or two fewer opportunities, the leftover opportunities are more visible to the crowd.
Okay, now to finalize, Jayant, inflation, recession, debt, war, what do you think will be the key drivers for the precious metals and their equities next year?
Well, we have the globalization is in deep trouble right now. Supply chains are not working very well, and we have a stagflationary environment. We have loss of productivity because of overregulation, because of ESG, because of a lot of bureaucratic problems that have creeped into every sector of the economy. So we have a productivity loss. Inflation is here to stay. There's a lot of money printing going on. And I think this is really a time when people are worried about protecting whatever that they have. Exactly the reason why people have poured in their money into the US dollar. Now, I grew up in India, Paul, as you know, and the street rate of US dollar in India is about 5% over the official rate. So which means that people are desperate for protecting whatever that they have left with them. And I think as a result, clearly, although that's not what people think, gold has actually done quite well, and it will continue to do well in the future. I really would have expected gold to be trading about 20-30% higher than what it is right now. But I think once the technical difficulties are gone, which is the liquidity crisis and the debt crisis tension that is gone, I think gold should perform over the next few months.
Well, let's hope so. Jayant Bhandari from Anarcho Capitalist, thank you very much for joining us today.
Thank you very much, Paul.
Stay tuned for more from Kitco Mining, Mines and Money, London.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group,